Hello friends, how are you? Vladimir here. This is the weekly forecast for the first week of February 2015. Well, last week was a bit tricky, especially the last days. So a lot of ranges on the majors. That's what we were dealing with. If it's the euro, if it's the pound, that well personally surprised me because I thought we are going to 154 correction. Bit surprising with the current price action. You can see it's just keeping ranging back and forth on this zone. If it's the Pacifics, we keep losing power, and again on the last few days, just ranging and zigzagging. And if it's the dollar Canadian, who finally reached, and once again, I'm a bit surprised because after it lost momentum, um, I had some bearish opinion already, but seems that it's not there yet, and maybe that's the time to get ready from the 120, 126 up to 130, 129, 130 zone. We are there, and a lot of action is going to. We will see right here around this. This coming week is non-farm payrolls week. That's the main thing we have this week on Friday. But there are a few more things we need to pay attention to, of course. The first one would be the trade cash rate, the trade balance in Australia, right, on Monday. Then on Tuesday we have the unemployment rate and employment change in New Zealand. Wednesday the ADP, that's the main event. And of course we go through trade balance in USA and also official cash rate in Britain. I don't think it will affect too much. And of course all the eyes to non-farm payrolls once again. So the week could once again be a bit tricky on most of it, not all the days, because well, we know how trading goes on the non-farm payrolls. So let's put the things on the table and let's say where we still can find our opportunities. As I say, dollar Canadian I believe is going to be the first one. I think the best way to deal with this pair right now is an investment. And from my point of view, the moment it will hit a red convincing candle, not just a doji, but a red convincing candle, it will be good time to jump in as investment. We have over 20 candles right on a daily chart. We have over 20 candles right on the weekly chart. They all extreme, including the monthly. So it's only question of when, not if, only when. And I do think from here up to here on this area we will start to see correction down. And remember, the final target for this drop could be all the way to this trend line, the very first trend line we have through the bottoms. We have a few lines in between, like this one of course, which we will have to pay attention to. So from here it will be a really good opportunity to start this investment. I definitely think we will see a lot of sell opportunities, a lot of bearish pressure very soon, and it could happen and it could begin even this week. So investment from my point of view is the best deal for this pair. But if we start to see lower lows like we started to see here, definitely worth the attempt to go and try to sell. Right now we don't have any. Okay, this one failed, if you remember, right here. Okay, this small rally didn't provide any continuation of downside. So the next one we have to pay attention to starts right now. We have the trend line also to follow, of course. Now let's see how it goes and where it leads us from here. Next one is dollar yen, which I think, according to the weekly chart, that it should try to reach its 20 MA or lower. Therefore, I remain bearish in my views. We still see main pressure down. We still see highs going down. The best would be, of course, if we get finally breaking below this very massive support, turn to be suddenly. But I would be trying actually some more aggressive approach. The way it looks and with the current way it goes, what I've been looking to go here is a retrace somewhere in between this zone, like in double waves here, like 1, 2, 3, 4, and from here I will be definitely trying to go short, protecting this trend line, because it does look like dollar yen is able, and well, at least according to the weekly chart, and actually and honestly also the monthly chart, which created an engulfing after a very long time of rallies, I would be trying to go and sell this rally, because if it does stop on this rally and start to drop, it's very likely we will get a really good massive move, and 115, 114 definitely could use us as targets. Another interesting pair I would be looking to deal with definitely is the euro pound, because from my point of view, if this pair, which started to create some kind of bullish sign, I don't buy it here, but if it managed to rally a bit more, get somewhere in between here to here, okay, and it's pretty big fat zone, but starting at this point, okay, between here to this area, I would definitely drop down to lower time frames and look for opportunities to sell. For example, the 4-hour chart. If it managed to do this move, I will be definitely looking to go and to start selling, because from my point of view, this is very strong saying from the market, and if it managed to slowly push it to the upside, going with divergence here, it's really good to try and go for a sell here. After all, and it doesn't matter how we turn it around, euro is under bearish pressure. Okay? And talking about the euro, does it worse to deal with this one? Well, personally, I think it still has more bullish potential than bearish. But right now it does hold inside this pattern. It is creating this kind of pattern here. So what I'll be looking to do here is definitely buy one more drop if provides divergences on lower time frames, or by the break of this pattern, aiming to take duplications. Okay? We have the trend line going here, so very easily to assume the pair will try to reach it if it managed to break up of this small pattern it creates on the 4-hour chart. So I do remain mainly bullish than bearish, definitely as long as 112 holds. Break below 112, I'll start to maybe reconsider my bullish position. Pound dollar is very tricky. As I said, it did surprise me. I was bullish. Honestly, I still remain bullish in my mind, even though it was clearing stop losses with its spikes. Okay? But the bottom line still holds here. Okay? It was holding and kicking stop losses in a row, but I still think the pair might continue to the upside. Only break below here would make me wonder if the bulls can last. So what we can do here is we can see this first move up. Now small correction, 1, 2, 3, 4, and I would definitely be looking try to long it once again, of course. And as I said, while we will protect this bottom that was created, I think, according to the weekly chart, with this inverted hammer, which might temporarily end this bearish drop, we might see the pair rallying. And according to the 4-hour chart bullish convergence, which we can see here, I would not be surprised if the pair will try this rally once again. So from my point of view, it's yet an up, a bullish move rather than sell. If this area will be broken and we'll get a close below 150 again, I will raise my hands and give up on the bullish attempt. But so far I remain bullish in my mind. 20 candles right, bullish divergence on weekly, bullish divergence on daily. Well, it's pretty convincing for me to try the buys. Pacifics, New Zealandian dollar, is that the bottom before a correction up? Yes or no? Time will tell. We definitely have to be ready for that. The way it looks right now, it seems that if we manage, oops, that's not the line. If we will manage to go and break this place, the pair might start its correction to the upside. The way, well, at least as for now, the way it looks, it's definitely able to rally back to 0.7350 up to 0.74, and who knows, maybe all the way to 0.75 once again. It's a bit early. All my bullish view here is relevant only if this last low will hold. If it will be broken, it's time to step back. Okay, and I remind you, the long run would be of course below 0.70, but for a short run we might see some rallies which will provide us opportunity to go for a sell right after that. So while this last low from last week holds, I would be trying to take this false break here with the bullish divergence, with the Bollinger Band duplication, and we'll be trying to go rallies. What I want to see is the break of this resistance and trend line here. If it managed to do so, it's a buy to me. Okay, well, basically that's my main opportunities. There are much more we can go and check and test. There is still the pound New Zealand, which I would definitely want to go and buy. Dips, we didn't have any dip from last week, which surprised me, I must admit. Okay, but that's worst to try these sells. Well, as I said last time, break below the massive trend line could give the call. I think it's yet probably best to buy dips here, because according to monthly chart and weekly chart, we have much more to go. So every small drop we'll get should provide us a very nice buy opportunity for coming future. Therefore, buy dips if you want to be more aggressive. Sell rallies, sell break, sorry, of trend line and the support. That should be good opportunity. The main thing here is the New Zealandian. If it managed to rally, the New Zealand crosses will manage to recover as well. That's all. Okay, that's the bottom line here. Now for commodities, here is the star. That's the oil, finally breaking this trend line, finally going above this resistance area, and finally creating for the first time some convergence for our chart. Weekly under 20 candles right, finally creating very nice kicker. Well, to me, it's a very positive sign. What I wanted to get here is double move correction, which definitely gives a buy opportunity. I think we should get it going to 48.50 up to 49 first of all. After that, we will probably get some deeper retrace, and then all the way towards 52, 53 or more. So I think buy dips is the best thing to do here. That's all I can say about that. And we pay close attention to the the indices, excuse me. All of them are actually, they create it live, as you can see, okay? And they do all follow the yen, the dollar yen, almost hand by hand. I think that's a call for a drop down. Time will tell yes or no. We definitely have to be ready for a possible break. We have an non-farm payrolls week this coming week. So does it worth to try and deal with that for long run now? No. After non-farm payrolls, I want to believe we will get some clearer picture. But on the short term, until then, every rally we will get, every small correction should use us as a nice sell opportunity. That's the way I see that, and I think we are going down here. So that's actually all for this opening of the week, the first days. Let's be careful this week. Take small risks. Don't take big risks on non-farm payrolls week. And let's see what the market brings to us. Thank you for watching, and I wish you good trading and wonderful week. Yours, Vladimir.